A very good afternoon once again, ladies and gentlemen. My name is Gabriel Achaye, and it's a privilege to host you this afternoon for our webinar session that is organized by our Capital Markets Authority. And the purpose of this webinar is to discuss capital market transactions, and we seek to understand the role of legal practitioners in the sector. And I bring you warm greetings from Arusha, Tanzania. I extend warm greetings from our CEO, Mr. David Sigano, and the management of the East Africa Law Society. This afternoon, we are privileged to have eminent speakers on this particular discussion. But importantly, our discussion will be moderated by Miss Irene Namuli. Miss Namuli is the head corporate and commercial practice group at LP East Africa, a premier integrated legal and professional services firm located in Uganda, Kenya, Tanzania, and South Sudan. She is a corporate finance lawyer with over 12 years expertise in banking, corporate management, project finance, governance, mergers and acquisitions, regulatory compliance, general business advisory, and she has undertaken several assignments with several multinational transactions across continents that have spanned from foreign investment, corporate structuring, financing, which both impact in area of green finance. She consults and sits on management boards with several entities where she particularly brings her knowledge in the areas of ESG compliance as well as advisory on strategic corporate expansion and sustainability. She holds a master's in corporate finance law from the University of Westminster, a Bachelor of Laws from the prestigious Makerere University, and a postgraduate diploma from the Law Development Center and a certificate in ESG, the Corporate Finance Institute. She's a member of Uganda Law Society and serves at the East Africa Law Society as our vice chairperson of the Corporate Law Committee. Ladies and gentlemen, please allow me to invite Ms. Irene Namuli to take on the discussion. Irene, we are all yours for the next 2 hours. So you will lead us and we'll be here to learn. Thank you so much.
Oh, wow. Thank you so much, Gabriel. That was a very, very generous and kind introduction. Good afternoon, our participants. Allow me to use the little Swahili I know, habari za mchana. And for my colleagues in Rwanda, bona premidi. Welcome everyone to this exciting webinar by ELS. Gabriel has told us everything we need to know about ELS. So I'll just say thank you to the Secretariat and the Institute for creating these learning forums for us and enabling us to glean knowledge from across the region. As Gabriel has told us, today's webinar is titled Capital Market Transactions, Understanding the Role of the Legal Practitioners in the Sector. All right. And my work today is to moderate the webinar and ensure that we each gain some practical knowledge from the panel of the ladies and gentlemen who have distinguished themselves in the capital markets sector. We all know East Africa's markets. Capital markets is really growing rapidly and the landscape is evolving. We're offering a wealth of investment opportunities and playing a crucial role in the region's economic development. Our biggest player so far is the Nairobi Stock Exchange, which offers a diverse range of equity, bonds, derivatives. We also have the Dar es Salaam Stock Exchange, which provides a platform for public companies to raise capital and investors to access growth opportunities. Of course, I cannot forget my own country, Uganda, whose stock exchange is considered one of the fastest growing in the region. We offer, a mix of domestic and international companies, on the stock exchange. And this is also followed closely by the Rwanda Stock Exchange. And hopefully we will soon be joined by Burundi, South Sudan, and DRC. We look forward to having them in the sector as well. So today's discussion is really meant to give us an overview of the different players, the trends, opportunities, the regulatory environment, and the growth potential that we have within the sector. As practitioners, how are we positioning ourselves and equipping ourselves to take advantage of the opportunities that are available in this dynamic sector with a very promising future. I believe this is a good segue for me to introduce our speakers of the day. I'll start with Ms. Alison Pichiriza Seruchacha. She is a seasoned governance professional and an in-house practitioner with over 10 years experience in corporate and commercial law, securities law, and regulatory affairs. She is currently the manager, legal and board affairs at the Uganda Capital Markets Authority and company secretary to the Uganda Stock Exchange. She is a member of the Uganda Law Society, the East Africa Law Society, and serves on the ELS in-house council and capital markets committees. She will be speaking to us about capital markets in the region and the role of the regulator across the region. Next, we have Ms. Bertha Mwiraja, a senior associate at Bowmans, Tanzania. She specializes in mergers and acquisitions and has worked on numerous projects in the corporate, mining and energy, telecommunication, and finance sectors. She is a member of the Tanganyika Law Society and a member of the East Africa Law Society. She will be speaking about potential areas that are desirable for exploration in the capital market space. We also have Mr. Charles Mabiru, a securities and investments lawyer at M&A Advocates. He has worked as a local and offshore equities analyst, a trader, a forex derivatives and index derivatives trader. He's a wealth manager, a financial analyst in training, a data protection analyst and compliance advisor, as well as a Bitcoin enthusiast. He is a member of the Law Society of Kenya and serves on the ELS Capital Markets Committee. He'll be speaking about the role of legal practitioners in capital markets across the region and in other jurisdictions. Last but not least, we have Mr. Jean-Pierre Tuishime, the managing partner of FixLex Law Chambers. He has worked as a legal advisor to Equity Bank Rwanda and Access Bank Rwanda. He has also taught law at various universities in Rwanda and presently teaches legal aspects of financial transactions and East Africa community law at the Institute of Legal Practice and Development. He is a member of the Rwanda Bar Association and the East Africa Law Society. He'll be taking us through the techniques of enhancing the role of legal practitioners in capital markets. So some rules for housekeeping. Our speakers will each have 25 minutes to present, and then we will have a 20-minute Q&A, interactive Q&A session at the end. You can, however, post any questions you have during the presentation in the chat, and they will be responded to by any of the panelists or a particular panelist after or during their Q&A session. Ladies and gentlemen, I'd now like to invite Ms. Alison Pichiriza Seruchacha to open the session with an overview of capital markets in the region and the role of regulators across the region. Alison, over to you.
Thank you, Irene. Thank you for the kind introduction, and good afternoon once again to the fellow panelists and to the audience that has been gracious enough to join this afternoon and on time. I'm delighted to be part of this discussion this afternoon, but also humbled to be sharing from a regulator's perspective the contemporary issues in capital markets in our region. And really, for me, it's just to spark that curiosity and to especially spotlight opportunities for legal practitioners within this space. If you could kindly allow me stop my video just to make sure we don't have any interruptions as I delve into the discussion. So in terms of what to expect from what I will share this afternoon, Irene already highlighted my area of discussion, but just to prepare in terms of the flow, I will kickstart with a high-level view of the capital markets regulatory landscape across the regions. As we all know, the markets are at different levels of development and growth. So I thought as a precursor to the main discussion, it may be helpful just to share a bird's eye view of our respective regulatory frameworks, which context will also be relevant for the subsequent discussion. been asked to speak about the role of regulators across the region. So I will share insights on the key role of a capital markets regulator. What does a capital markets regulator actually do? What guides or informs that role? And what does execution of this role look like from at a practical level? Then, just drawing from this focal point of discussion, the role of a regulator, I will then share highlights on the key regulatory developments in the different markets. And for this, I'll use a timeline of 2023 and maybe this year, 2024, what is new, what is in the pipeline. And of course, as I speak to the regulatory developments, I'll just briefly spotlight the emerging regulatory issues across the region and specifically the opportunities therein for legal practitioners. So just diving right into the discussion, when we talk about the region, I'm going to speak about Uganda, of course, Kenya, Tanzania, Rwanda, and to a small extent, Burundi, which, as some of you may be aware, recently established capital markets authority for their market and are in the process of establishing the exchange, the Burundi Stock Exchange. The markets have been set up at different points in time, and that also speaks to the differences in the level of development, as we shall see later on. The establishment of the market dates back to the 1950s. This was a significant point of establishment, and it was led by, the establishment of the Nairobi Stock Exchange. That was in 1954. And NSE, this was really still under the East African British Protectorate, and it was the stock exchange for the entire East African region, with the listed companies from Uganda, Tanzania, and of course, Kenya. Fast forward to the breakdown of the protectorate, we had the non-Kenyan companies delisted and nationalized in their respective countries. And subsequently, we now have the regulator, CMA Kenya, as we know them today, being established in 1989. And then later we have Uganda in the 1990s establishing their own stock exchanges. The Uganda Securities Exchange was established in 1995. We see the Dar es Salaam Stock Exchange also coming on board in 1996 and later being operationalized in 1998 with its first listing. And then we've had Rwanda follow on. In 2007, it started as a market advisory council, whose role was really to spearhead the development and establishment of capital markets in Rwanda. And then we had the authority being established in 2017. I see there's a question there. No, there are no slides currently being shared. Sorry. And then the launch of the Rwanda Stock Exchange. And of course, with our newest entrant, Burundi, which was established in October 2020, the setup is pretty much still ongoing with the review of the regulatory framework and also the process to establish a stock exchange. What is interesting is you see the stock exchanges being established first, and then you have the regulatory authorities following soon after. So it's been a bit of catch up from day one. Moving on to the legislative environment, when you look at all the different markets, the capital markets across the region have similar laws governing the capital markets, with a few divergences arising mainly out of differences, maybe in level of the market development. But broadly speaking, the legal and regulatory framework in the East African countries for the capital markets provides for trade in equity, fixed income securities, collective investment schemes. Usually there's focus on the stock exchanges and equities, but capital markets covers also the fixed income space, that is corporate debt, also government bonds and treasuries, and then also the collective investment schemes, which across the East African region is actually a very fast growing industry when it comes to the capital market space. And fund management and investment advisory services. So these are across the different regulatory frameworks, you'll find that these are the recurring themes. Of course, save for Burundi, which is yet to develop a framework for collective investment schemes, but on the equities and fixed income side, they are pretty much at par with the different markets. And this is really speaking from a regulatory or legislative framework point of view. Still, moving on regarding the regulatory landscape, in terms of adaptation of our regulatory frameworks to international standards, Kenya, Uganda, and Tanzania are members of the International Organization of Securities Commission. This is usually acronymed as IASCO. And IASCO is the international body that sets standards and best practices in securities regulation. So Kenya and Tanzania are already Appendix A signatories of the IASCO Multilateral Memorandum of Understanding. Now, what that means is that to a large extent, they've been able to align their regulatory frameworks to the standards and principles that IASCO has set, and are therefore full members. Uganda is a signatory to Appendix B, working towards Appendix A. And this means that broadly speaking, we've been able to align our regulatory framework. We did have some amendments that came through in 2016 when we last amended our Capital Markets Authority Act. And a huge number of those amendments were to allow us comply with the IASCO principles and allow us then become signatories of that multilateral memorandum of understanding. Rwanda is not yet a full member of IASCO, but just a quick scan of its principal legislation, you will see that there's been an effort to comply with the principles. It is an associate member of IASCO. So in terms of cooperation, in terms of information sharing, in terms of aligning our different regulatory frameworks with the standards that IASCO has set, you'll see that there's harmonization across the different markets, I would say, being that IASCO principles play a very foundational role in the development of our respective regulatory frameworks. Now, one may ask, so you're aligned at international level, what about regional level? What does harmonization there look like? So at a regional level, we have a regulators body, and that is the East African Securities Regulators Association, acronymed as IASRA, Capital Markets Authority Kenya, Tanzania, Uganda, CMA SA Tanzania, entered into an MOU where we adopted a common blueprint for integration of East African capital markets. That was in 1997. And later we had Rwanda join, and subsequently Burundi. At the time it joined as a bank of the Republic of Burundi, but recently, that was actually early this year, we were able to welcome Capital Markets Authority Burundi, now fully established as a member. And what IASRA does is that it operates as a consultative forum where the regulatory authorities can discuss matters of interest. And as a regulator, if your matter of key interest is really regulatory framework, that forms the bulk of our discussions. So under that framework, we're able to look into the various national laws and develop frameworks that facilitate harmonized provision across the board. These proposals are tabled before the Capital Markets Technical Working Committee for passing at the East African Community Secretariat level. And these come through in form of EAC Council directives, which then guide the different member states on how they can approach specific provisions in their national laws where a pronouncement has been made through the directives, that is in the domestication process. So currently we have 14 council directives that speak to the capital markets matter on a wide range of issues. We have investor protection, we have directives on self-regulatory organization, on public offers, on compensation funds. So at national level, each partner state endeavors in the process of domestication to capture to the best extent possible the spirit of those directives, and only departing where there is a unique country peculiarity that may not permit the adoption of that directive. So in terms of the regulatory landscape, that is what our markets look like, broadly speaking. And if you can then allow me to delve into the role of a capital markets regulator, what does our role look like? The principal role of a capital markets regulator, this is not, maybe it's not unique to the East African region. The principal role, I would say there are two. First is to create an orderly, fair, efficient, and transparent market. That is the principal role of a capital markets regulator. And then an incidental role to that is to protect investors or investor protection. So whatever a regulator does, it should essentially result or be in the furtherance of those two objectives. Now, this appears quite a daunting task in terms of how a regulator can actually achieve this, but we do have some guidance. We look at we refer to the IASCO principles because they've set a sort of blueprint on how a regulator can position themselves to actually implement this role. When you look at the IASCO principles, there are 38 principles, but principles 1 to 8 specifically relate to regulators. And I'll just briefly share what these principles look like. So the principles essentially say that if you're to execute your role as a regulator, if you're to be able to provide an orderly, fair, efficient market and to protect investors, number one, your regulatory framework should clearly indicate your objectives as a regulator. So your objectives must be clearly articulated. And if you look at the format of the different regulatory frameworks, the principal legislations across the different markets, you'll find that these are clearly articulated, both the objectives and then the functions of a regulator are the leading provisions across the different legislations in the market. Then you must have operational independence and accountability. Now, these principles highlight that if a regulator is actually going to ensure that markets are fair and efficient, it should not be subject to the direction or control of another body. This provision is akin to the independence provisions that you would see, for instance, in the central bank regulation. And really, the essence is to safeguard the authority of a regulator to be able to protect the fairness that needs to be preserved within our capital markets. Then you have to have adequate power and resources and capacity. Now, looking at this, especially in the aspect of power, that can be debated, especially when it comes to enforcement in the capital markets. Can regulators, for instance, directly freeze assets? Can we make arrests where there's market manipulation? Or are we at the mercy of other front-facing institutions, say police, Office of Public Prosecutions, when it comes to actual enforcement? The other requirement IASCO has sent for you to be able to achieve your role as a regulator is clear, consistent regulatory process. I think most countries are able to achieve this because we do have a fairly straightforward and documented process through which regulation can be developed or amended or reviewed. The other interesting issue that comes up as a principle is that staff of the regulator should observe the highest professional standards, including standards of confidentiality. If staff are not observing high levels of confidentiality, it becomes difficult to ensure a fair market. The link between market or material price sensitive information and performance of the market cannot be underscored. And the regulator, by virtue of its role as an approver, as an overseer of both products and licensees, it's not unusual that this information price-sensitive information will be in the domain of the regulator before it hits the public domain, maybe for purposes of pre-disclosure approval. So confidentiality of staff that have access to this information becomes a critical factor in an orderly and fair market. So as a regulator, there must be mechanisms which this can actually be preserved, and these mechanisms ought to be known to members of the public. And the regulator should also have processes to identify and mitigate and manage systemic risk, as well as be able to ensure that conflict of interest or misalignment of incentives is avoided or eliminated. So these are the guiding principles in as far as assessing whether or not a capital markets regulator, whether it be functionally or structurally, will be in position to deliver the primary objective of an orderly, fair, and efficient and transparent market, or protecting investors. So in terms of our roles as capital markets regulators, clearly the work has been cut out for us. First, you need to create a sound legal and regulatory framework that takes into account the inherent risks of the industry and that has mechanisms that can cushion or reduce systemic risk. Now, across the 4 regions, I do know that we have robust principal legislation for the market, and this has been continually reviewed to ensure that provisions reflect current market concerns. They are able to accommodate new risks that arise for the market and also reflect the growth aspirations of the market. Second, the laws also provide a robust licensing and approval criteria for market actors and products. And as we all know, the market is as good as its intermediaries and the investment worthiness of the products on the market. These 2 elements can either collapse the market or build confidence of investors in attracting even more investors. So regulators have to act as gatekeepers to the players and products of the market, because when we do that, we're not only ensuring market confidence, but we are carrying out our primary role of investor protection. Then acting as watchdogs, this comes with the supervisory mandate. And of course, this goes hand in hand with making sure that you have robust surveillance mechanisms that match the complexity of market players and the industry. As we all know, capital markets is fairly complex in terms of how our products are accessed, how they are issued. So it's important that in order to have a robust supervisory framework, you have surveillance mechanisms that have that capacity to match the complexities of the day. Then finally, attached to implementing the role of an orderly market, but also attached to investor protection, is the critical aspect of making sure that there is a dependable mechanism for dispute resolution and reprieve against errant market actors. Capital markets is fast-paced as an industry, so there's need for an equally fast-paced and dispute resolution mechanism if we're to actually achieve orderliness and efficiency that is expected. And indeed, across the different regulatory frameworks for the market, you'll notice, 1, the authorities, to a certain extent, have intervening administrative powers when it comes to market disputes and complaints. In the Ugandan framework, for example, if a market intermediary is aggrieved by a decision of an exchange, they can appeal to the authority. I'm also aware that across the different jurisdictions, prior to approving rules of an exchange, for instance, one area that is considered is the appeals process in relation to activities that are conducted on the bourse. Similarly, when it comes to the CIS space, managers for collective investment schemes are actually expected, or they're required, to have a satisfactory complaints management framework for quick resolution of complaints, and investors have the option of escalating to the regulator for assistance. All 4 states have provisions for tribunals. I'm not sure whether all are fully functional. I know, for instance, in Uganda, our tribunal has not been fully operationalized, but just to highlight that from a regulatory perspective, the dispute resolution mechanism has actually been provided for to facilitate expeditious disposal of matters given the nature of the industry. Again, as far as investor protection is concerned, the mechanism of reprieve or indemnity is also important. This goes hand in hand with the dispute resolution mechanisms. And when you look at the four markets, we do have provision for compensation funds, investor compensation funds, which have been established to compensate eligible investors with valid claims arising from improper activities by market intermediaries. So this really captures the role of a capital markets regulator. Now, outside the IASCO principles, a unique twist to the role of a regulator in the East African region, which you'll find cuts across the 4 states, Burundi inclusive, there's been a third role that is incorporated in all our legislative frameworks, and that is the role of market development. So you'll find that the capital markets regulators in the East African region are also expected to contribute to the development of the market. Now, as regulators, how do we play our part in market development? By and large, the tools that we have at our disposal is really regulation. And when I say regulation, I'm referring to both principal and subsidiary legislation, as well as guidelines and market directives. So beyond the IASCO principles, the regulations and the guidelines that are provided are expected to create a facilitative environment by removing impediments to market growth, but also providing the necessary incentives that will support market growth. Sometimes this may not fall directly within capital markets regulation, so you might find need to lobby for other entities. Then there's also the issue of education and awareness. So a lot of education of investors. I saw early this year, CMCA Tanzania rolled out a securities industry certification course that is part of market development, and that is part of the role of the regulator. I see I'm running out of time, so I'll just quickly wind up with highlights of regulatory developments across the region that I thought I'd just spotlight. In terms of compliance and supervision, last year we saw Kenya roll out credit rating agency regulations, which provide oversight for both domestic and foreign licensed credit rating agencies. And this goes hand in hand with our role in terms of making sure that systemic risk is adequately managed. When it comes to prudential oversight, we've seen developments in Uganda where we've rolled out capital adequacy regulations, and these primarily cover minimum initial registered share capital as well as working capital requirements for the broad spectrum of market players. Now, when it comes to product and innovation, we've seen a few activities in the Sharia compliant or I would say Islamic capital market space. Tanzania did issue guidelines for sukuk bond issuances, and I believe there's actually been products that have been brought to market utilizing these guidelines. We've also seen, of course, there's a lot of activity in the fintech technology, and capital markets are blending quite well, quite fast. We've seen developments from Rwanda rolling out regulatory fintech sandbox guidelines for both equity and debt-based crowdfunding, among other things. So these are just a few examples of the areas that are emerging. ESG, and I'm glad Irene is an expert in this area. So we're also seeing a lot of ESG and sustainability-linked finance developments, another contemporary area. So we do expect regulatory developments in this space. And at the risk of going on and on, Irene, allow me to end here. Thank you for listening to me. I'll probably make additional comments in the follow-up questions.
All right. Thank you so much, Alison, for that very insightful discussion. I like the fact that you've highlighted the role of the regulator in mitigating risks in the in the sector. We have very robust disclosure regimes. We've talked about investor protection, which is very important, and licensing. And you've also talked about incentives that we're thinking of innovating within the sector as the regulators. But I still have questions about how are we looking at harmonization of the different regulatory frameworks, because you've told us Tanzania is doing something, Burundi is doing something, Rwanda is doing something. Would that be something that we could look at as an incentive? Would it help to, make the sector more attractive to investors if we looked at maybe harmonizing our regulatory frameworks? That's something for us to think about. Or you can answer quickly in about 2 minutes.
All right. Yes, definitely. Harmonization of our different regulatory regimes would make for an attractive market as a block, as a ESC block. Of course, the practical challenge is, like I earlier mentioned, is that we are at different stages of market development. So you'll find that sometimes the products where there is high appetite in a particular region, rather in a particular market for a particular product, and which would then motivate that regulator to push out, say, regulation along that line, may differ from another market. That said, the consultative framework we have with at IASRA at the regional level is very helpful, because what happens is, through that consultative process, guidelines are developed. So the guidelines act as a basic minimum framework for you to develop your regulation. So at any one point, I'll give an example, say for crowdfunding. I know Kenya has rolled out crowdfunding regulations. Uganda has not yet. But as we are developing we do intend to have that in place. So as we're developing those regulations, we shall refer to the guidelines. And subsequently, I believe Rwanda or Burundi will follow suit. Now, what that means is that the outcome of the different regulations will not differ. But like I mentioned, there may be peculiarities in a particular market, say maybe on grounds of policy, which may not allow you to domesticate per the directives. So in that instance, you may have a divergent provision, of course, with an explanation, but by and large, we expect that the regulatory frameworks will be aligned. Now, over time, we will see that harmonization come to life.
Okay, thank you so much. I see a comment from Kayuka. I think that the success of any capital market depends highly on the awareness of economic agents on the advantages of different products available in the very market. My question, what can be done to increase the community awareness on the different products and their respective advantages? Thank you, Kayuka. I think within the course of the discussion, we are going to answer your question, because we still have quite a number of discussions to go through. This was just the first one, but hang tight, we will answer you. Thank you so much, Alison. That was very insightful. I'd now like to invite Bertha to take us through the presentation on potential areas that are desirable for exploration in the capital market space. Bertha?
Thank you very much, Irene. Good afternoon, everyone. Thank you for having me as part of this presentation. It's a privilege to be among the prominent speakers. As Irene indicated, I'll be addressing the potential areas that are desirable for exploration in the capital market space. I'm based in Tanzania, so a lot of my practical examples will be based from the Tanzanian Regulatory Authority, which is the Capital Markets and Securities Authorities. As Alison mentioned in her presentation, the East African community has played a big part in ensuring that there is harmonization on the implementation of various regulatory authorities in respective countries. So in Tanzania, research has been undertaken to implement the East African Joint Market Protocol for harmonization with the law. And the CMSA department that is responsible for market development has undertaken a lot of research to ensure that there is development aspect of the capital markets, focusing in developing new products and services, also in creating demand for securities by developing different training programs for market intermediaries, as well as devising conducive environment for development of the market. In line with that, we have seen a lot of amendments to the telecommunication, mining, and foreign investors legislation to kind of create more room to develop the capital market sector. So the following are the identifiable areas of opportunities or interests on which can be exploited as desirable areas. The first one is the government bonds. For example, in Tanzania, we see that there are a lot of substantial development projects in the infrastructure sector that requires long-term financing. So there is potential, or there is more room that would require funds, and such issuance of like infrastructure bonds, municipal bonds, corporate bonds, and real estate investment trust would help to support that industrialization process. So this can be exploited, and we understand that there are a lot of studies that have been undertaken to ensure that the practical aspect of it, as well as the law, kind of fosters that environment in order to ensure that there is infrastructure bonds, municipal bonds, and the like. Another one is equal opportunity and increase in terms of the non-government bonded equity. So as we are all aware, the role of the public markets for corporate securities is to provide funding in terms of both equity, capital, as well as debt funding to private sectors to allow companies to grow the intermediary savings, as well as channeling it through the productive investment. So there is room to have more non-government bonds. We have seen CRDB and NMB bonds recently in Tanzania, but there's a bit of a challenge in ensuring that these corporate or non-financial and financial, let's say, entities who struggle with the small size, highly fragmented, and illiquidity, the demands are being able to be met. So there is a study that we understand is currently being undertaken in order to face that demand side and ensuring that there is a good balance between investors who would want to see high capacity, as well as the regulations to ensure that the CMSA and other regulators are highly involved in uplifting that part. Another area that we see as a potential area of interest is the derivative markets. If we compare, for example, Tanzania, Kenya, and South Africa, you'd see that in South Africa, the derivative markets is more advanced compared to, East Africa. So there is a potential room for derivative markets to be analyzed and explored. There are a number of interests from various banks who are looking into ensuring that there is proper guidelines in terms of the law, as well as the practical part of it, in ensuring that they can fully participate in it. So the primary focus or purpose of the derivative markets is to manage risk, which are associated with the price movements, by underlying assets, as well as providing risk management for borrowers and investors. So there is a bit of a gap in law in terms of that implementation. So while there is a strong market development synergies between the cash as well as the derivative markets, there need to be a well-functioning system and laws or regulations that would foster for development in this area. Another potential area of interest is the money market participation. We have the central government through the central bank, which is dealing with investors and ensuring that there is participation of money markets. But there could be more development in this area in ensuring that, let's say, the commercial banks, government issuers, as well as the other participants are well coordinated together in ensuring that there is an uplift in that area so that there is equal opportunity for all the participants, but as well as, education to the general public. We have seen a lot of changes in the last years based on the availability of information and technology online, but there has to be a sensitization focused initiative in ensuring that across all the East African regions that there is awareness and familiarization in terms of how this space operates. Thank you very much. So those were the 4 areas of interest that we have highlighted as being the potential areas of interest. I'll pause and see if there's any question.
Thank you, Bertha. Let's see, I do see something in the, oh, this is asking about a recording. All right, I think maybe because the audience hasn't yet asked any questions, I will take a shot and ask one. As an ESG expert, I cannot fail to, sneak ESG into the conversation and ask if we, integrated ESG into our capital markets, do you think it will bring any value into the sector? And what opportunities do you see we can harness if we, integrate ESG into capital markets?
Thank you, Irene. So luckily for me, knowing that you have an ESG background, I prepared myself for this question. Thank you very much. It's an interesting and it's a well point of discussion, taking into account where the world is heading. So my take is that globally we have seen that the market for impact investment, sustainability business, as well as environmental and social governance is estimated to approximately more than 100 trillion USD. So there is a lot of opportunities here. We have seen in the African countries that there has been a lot of interest from investors across the world that would want to invest in the African countries. So for example, in South Africa, we have seen that there was large stock and bond exchange that was launched in 9th of November last year. And it was specifically launched to deal with the carbon market. There was a joint venture, and the new market will operate under a separate entity, and that will allow participants to buy and sell credits through the platform, which is the Johannesburg Stock Exchange. We have seen a lot of legislation and regulation that are beginning to change accordingly. And there is a rise of shareholders, civil society activism in driving public awareness. We have seen laws change in making sure that there is value in responsible investment in this area. So, for example, in Tanzania, in 2022, a law was passed, which is, it's called the Environmental Management Control and Management Trading Regulations, which caters for control, management, as well as buying of the carbon credits. And then in a span of 1 year, we saw changes into the regulation, and this was based on public comments that the implementation is kind of hard. So there were a lot of changes. There were some incentives that were given into the act, but then the taxes were a bit high. So there was a revision on the regulations. And as of recent, we have seen like 51 projects that have been registered with the Responsible Carbon Monitoring Center. In Kenya, the law came in 2024, and then it was gazetted and passed by the cabinet minister. Kenya has gone a little bit further. We've seen the Central Bank of Kenya was involved in the climate. They issued a guideline on the climate-related risk management. And then there was a collaboration with the European Investment Bank back in October 2023. And I understand as of recently, there's a draft Kenyan Green Finance Taxonomy that aims at providing guidelines for the banking sector and other market participants to make informed green investment or financing choices. So there is a potential appetite for ESG, especially the carbon credits in the capital market space. And I'm sure that in a very short span of time, we will see guidelines or, notices being issued on implementation as well as incorporation of this sector into the capital markets security.
Yeah, thank you so much, Bertha. I think even in Uganda, we are in the process of putting together climate financing regulations. I'm not yet sure when they'll be out, but I do know that I'm part of the team that's trying to review those. Thank you. Maureen, your question was, can we expound on ESG in capital markets? And I think that's what Bertha has been responding to. I'll move to Shema, who's saying, greetings. Could you please explain if there are any derivative products in the ESC and Rwanda in general? If yes, what are they?
So to the best of my knowledge, I'm not aware of that, of the derivative products within Rwanda.
And ESC in general?
Not yet. I'm aware of Tanzania. We have a guideline from the Bank of Tanzania that deals with the derivative markets, but we haven't seen anything being listed into the capital market space.
Yes. And I think we have we are relatively new and getting in. So it's growing. It's a growing market. We haven't yet really understood it, but as we go move forward, I'm sure it's an area we will see some development. All right. I don't see any other questions. So maybe I'll release you, Bertha, and then we will have Charles come in. Thank you so much. Thank you so much for the presentation. Our next speaker will be Charles Mabiru, and Charles is going to be talking to us about the role of legal practitioners in capital markets across the region and in other jurisdictions. So this is where we all sit up and pay attention, because he's going to take us to school about what we need to do as practitioners in the sector. Thank you, and welcome, Charles.
Thank you so much for the kind introduction. I'm quite humbled to be part of this panel and quite excited to be here to talk about legal practice in the securities and investments industry to the best of my knowledge. So first of all, there was a question about derivatives in East Africa. I know in Kenya we have stock futures. So what you'd imagine a futures contract is supposed to be, but for stocks. I hope that answers the question that was asked by the person who had asked it. So mine is to talk about the role of a legal practitioner in this area of capital markets and securities and investments. So I've written a few notes, so you'll see me looking to the side just to help me go systematically. So the most important role of a practitioner is to understand the products that are in the market. So There are quite a few products, their shares, their bonds, and their derivatives. And one would imagine that that's the whole world of securities products. But every day, I have to be honest, I learn new products that I've never heard of. And just this week, a client comes and asks me about a cryptocurrency coin called Dogecoin. And now you have to start learning about what Dogecoin is. And this is separate from Dogecoin, which was being pushed by Elon Musk. So you start by learning about Dogecoin, and you learn it's a subset of Bitcoin. So Bitcoin I have an understanding of, but Dogecoin I don't. So you try as much as possible to understand the products that are being offered, those that are regulated and those that are not regulated. For the main reason that when your client will come to you, they'll not come to you expecting to know. They'll just come and tell you that, hi, this is what I want to do. I've seen it done in another jurisdiction, and I think it can work here because I have identified this gap. So you'll have to understand that you're dealing with an entrepreneur. And an entrepreneur is someone who identifies gaps in the market. So they are saying that this is a potential business opportunity that I can take advantage of. So I want to start this business and I want to fashion it in this way because I have seen it done in this way in this jurisdiction, or I'm just imagining that this can work this way. So understanding what exists in the market is extremely important. One, because you do not want to misadvise your client on what exists. You also do not want to start giving hopes to your client that this product one can possibly work with it in your jurisdiction without breaking the law. So you really, really need to understand, especially where your client is coming from and which jurisdiction specifically they hope to launch whatever they are hoping to launch. So that, I think, is the most important role, is to understand the market as much as you can. So I guess following as many business discussions as you can get on CNBC and Fox Business and all these other financial newspapers and financial blogs. Also trying out some of the products. If you can start trading, that is, it will be welcome. Not to say that if you start trading, it will go well for you. All I'm saying is that it's good to have an understanding of what these products are, and being immersed in whatever your clients are immersed in, so that you can understand what they're doing. The other role, of course, is applying the law. So the laws, when it comes to, and I'll say widely, the financial industry are quite they're quite many. So, like for example, if you look at the capital markets laws, and this one I'll touch on Kenya where I practice, there's a CMA Act 2013, and then there are regulations that are born from that act, and there are some regulations that were born before. So, like the listing rules of 2002, those were before the 2013 Act. But those ones you need to understand and have read and understand the different market segments: the main market, the alternative market, the SME market segment, and the various market caps that are required, the various tax incentives that are provided in the different markets. So you'll see, for example, in Uganda, the different tax incentives for those who list, different from Kenya, different from Tanzania, and the like. So you need to have this. At least you need to understand that, first of all, this does exist, and because you're not a dictionary, a legal dictionary, you should know that there are some tax incentives for those who list. Because when the person will come and ask you, how about this jurisdiction? That's when now maybe you can go and research and give something more detailed, but at least you should understand that that actually happens. So in application of the law, there is, of course, the advisory services. there is the registration and of businesses. So, for example, someone has, this one I'll just turn to a list here I have of those who have come. I'll not say whether they're clients or not, but if someone has come, for example, and they want to register as a Forex brokerage company, you need to understand, are you hoping to be dealing or non-dealing? If you're going to be dealing, you need to understand that you need to have 50 million shillings in Kenyan shillings, or 30 million if you're non-dealing, and so on and so forth. If for example, someone comes and asks you now that the tax regulations are becoming too hot in this jurisdiction, which jurisdiction can I go to within the continent, on the globe? Where can I offshore to? If we are offshoring to Mauritius, is there something like a tax treaty between Kenya and Mauritius, Tanzania and Mauritius? If we are offshoring to Seychelles, which are the firms that we are going to go to? Who are we going to talk to? What are the regulations in that jurisdiction? What do the regulations in your country provide? What is legal and what is not legal? Someone may come and tell you, I want to register a credit company. What are the requirements? Some like for the central bank in Kenya, they'll require you to have some internal policies that are to be filed with the application. What are the statutory fees for filing? So some business organizations will require 2,000 shillings. Some will require 200,000 shillings. Some will require 20,000 shillings. That will help your client to prepare themselves psychologically so that they know what they're getting themselves into. Some will come with questions about cryptocurrencies. I have a product that wants to interlay fiat currency and Bitcoin, fiat currency and Ethereum, and they're like, how am I going to do it? And having a very, very, very good understanding of the market and what is there, what is possible, what is not possible, what is possible in other jurisdictions is extremely important. And then therefore now, with the application of the law, sir, now you've already identified that this business fits into this category of regulation. So from there are the regulatory standards and documentations that are required. So you'll find some have very high thresholds. Some you need to have complied with different laws. In the financial industry, for example, you cannot do without an anti-money laundering policy. So there's the legal compliance bit, legal compliance bit, and then there's the audit bit. So the legal compliance bit in, for
Charles?
example, this person
Charles, we're losing you a bit.
wants to set up a financial, you want to ensure that you've advised
Charles?
them that you need to have an anti-money laundering policy that is in line with the law. Yes.
Charles?
Yes. Yes.
We lost you a bit. At some point you got frozen in and out. So could you just
Where was at what point? What was I talking about?
We'd gotten to the point where you're talking about the documentation that is required and the compliances that we need to do. And then we started to lose you.
Oh, sorry. Actually, my computer is talking about an unstable network. Sorry about that.
Yes. So just take us back a bit and then we plug in from there. Charles? Yes, Judith, I think we're going to suggest that. Charles, maybe let's try working without your video. So we see if the network stabilizes.
I hope.
There's a suggestion that maybe you switch off your video so we see if the network stabilizes. Okay, as we wait for Charles to work out his technical glitch, I'll just go through a little bit of the highlights of what he's told us that we need to do as practitioners. One thing that I've understood is you need to make sure you know the product. You can't just, this is a very specialized sector. You can't just wing it. A lot of the time, lawyers, we say we know everything about everything and anything, but this is a place where you actually need to understand, read and understand the product and the legal regime that accompanies it, because you don't want to give advisory that ends your clients in jail. And also you need to understand how to structure the products to fit into whichever jurisdiction you've chosen, and then also look at the tax regime, look at the taxes that accompany the product that you are advising your client to take, or whatever they've come to pick up. I noticed Charles is still, okay, he's logging back in. All right, Charles, I was giving a very high level summary of what you've been talking to us about, so let's continue.
Okay, so I was talking about application of the law. So there's the legal and compliance bit.
Yes.
So you need to understand the laws that regulate the financial markets. If
Yes.
may it be the money markets, the capital markets, and also the commodity markets. So, for example, our CMA in Kenya is in charge of the commodity markets. So we are trying to regulate the coffee industry, and maybe soon we'll start regulating the tea industry. So, and for example, attending the the coffee auctions that are hosted by the Nairobi Coffee Exchange on Tuesdays is extremely important, so that you see how the system works. Going to your local securities exchange is also extremely important. See where it is, meet the people who are there. Knowing the people who are at the CMA in your respective country is also extremely important. When they hold symposiums, when they hold talks, it is also extremely important to get to know them. Get to know what a bond is. Get to know, buy a bond if you can. Have these products with you as part of your portfolio, so that if your clients come and ask you, for example, and this is on succession. So a client comes and asks me, my mother had bought this and this bond, and now we are wondering what is the process of transferring said bonds. Another very common one is shares. So, for example, it's good to have to understand how are shares transferred in the event of passing. For example, for us, you go to the CDSC, the Central Depository Settlement Corporation. You do an affidavit and so on, and they will help you transmit the shares to the person who the court has decided is supposed to receive said shares. So that is about as much as I can say on application of the law. There's one small bit on that. After you have applied the law and you have helped your client set up the necessary external and internal regulatory processes, you can suggest to them that you can possibly do a legal audit. So a legal audit behaves like a financial audit. So we are trying to see what laws regulate your specific business, and now that these laws regulate your business, have you complied with these laws? So it helps to reduce legal uncertainty, legal liability, helps your client to be sure of what they're doing, helps them reduce legal costs, and basically plan, because most business people are very sensitive about legal issues. The minute you start talking out, they start talking to a lawyer, they start sweating, and they don't want to imagine what it means, because you're going to draw up a very interesting fee note, and and they start to panic. So having done a legal audit will help them at least have understood these are the areas where we are exposed, these are the areas that we could amend, and so on and so forth. And the last role in my thinking is the resulting litigation. So this one is interesting because you could advise somebody, having understood the roles of a practitioner. You could have understood the capital markets products, and from there someone comes and tells you, I need to pursue this person because they have done this. So it doesn't mean that because you advise somebody there's resulting litigation, but it could happen that way. It could also happen that someone comes fresh, that such and such a person has wronged me, and I need to sue. So that is also a role of a practitioner in this industry. So, like for example, for shareholders of Kenya Airways, they are quite. What happened is that Kenya Airways around COVID tanked quite a bit. Then it started to prop up. So it went to 89 cents, and then when started moving up very quickly. So it because there was an announcement during the confusion in COVID that the government was going to either purchase or bail out Kenya Airways. So the share moves from 89 cents to 1 shilling to 2 shillings to 3 shillings to 4 shillings. So at one point, the regulator decided we are not going to allow this to continue, and they took it off the market. So for shareholders of KQ, they're still waiting for the regulator to decide when to allow trading. So I know right now there's an active litigation that is going on with a colleague of mine at the Capital Markets Tribunal. So those are some of the roles that one is supposed to be aware of. Sometimes there are those off the cuff assignments. So, like for example, there's one specific example I can give. Like there's this when KCB was selling National Bank to a bank from West Africa. Ideally, you're supposed to do a cautionary announcement. So that cautionary announcement was done by a law firm somewhere. So those are some of your roles. So it doesn't necessarily have to fall within that bracket, but you could get instructions on such a job. And the last bit is you need to understand the taxation of these products, because your clients will ask you, if I get into an infrastructure bond, what am I looking at? So they're asking you not because you're an accountant, but because all these taxes are done through legislation and you're a lawyer. So they will come and ask you, we are hearing, for example, that if the Finance Bill 2024 goes through, the infrastructure bonds will be taxed at a rate of 5%. Is that true? And you have to have the information. We are hearing that family trusts are going to start being taxed the income on family trusts is going to start being taxed. We are hearing that there's going to be capital gains tax on assets that are housed in family trusts. So advice. So that is also there. Now, with regards to outside jurisdictions, because the discussion is supposed to be what we know and what we don't know. So what happens there, in my experience, is that somebody is coming from another jurisdiction. There's a product that works in that jurisdiction, and they want to see whether it can work in this jurisdiction. So, like for example, person X comes and tells you, so we have this product called this, and in our jurisdiction, it works like this. And we think that based on the laws that are here, in our own simple reading of the laws, this is how this product will work here. And we have gotten funding so that this product can be implemented in A, B, C, D. And what do you think? So in such a scenario, of course, yours is to give a legal opinion based on what they are telling you. So again, understanding a myriad of financial products is extremely important, so that you can try to fathom what it is they are talking to you about. A client will come and tell you, I'll talk about trade and what a client told me. So was it either Safaricom or KCB moving from 13, it was Safaricom moving from 13 bob to around 17 bob, and someone had a futures contract with a certain investment bank X. So they come and tell you that investment bank X, instead of because the share went up and started going down before it went up again. So when it started going down, the investment bank was supposed to do something called a margin call. And a margin call means, because you're supposed to sustain the trade using premiums, we are going to call you and ask you, kindly add more money. So what happened in this scenario is that the investment bank did not make a call to said person, so said person is aggrieved. So you see, if you do not understand what or how financial or stock futures and work, then the person will come and try to explain to you why they were wronged, and you'll probably float. Another example is person X comes and says they're trading forex, and specifically they're trading Japanese yen USD, that what do you call it, currency pair. And as according to the other brokers, online brokers, FXTM, there's this service everybody uses called TradingView, where everybody can see financial products. So according to that website, it was actually USD Gold. So USD Gold did not tank, but for this specific broker, if you look at their chart, the price went down and took out all the stop losses, and this person's stop loss was taken out, and his trade worth 100,000 shillings. He lost that money. So now you see, the thing is, if you do not know what a stop loss is, or why that is wrong, or where to check to compare whether gold USD tanked or did not tank, that will be a problem, especially for your client. So that is the role, I believe, of a practitioner in this space. Thank you.
Thank you so much, Charles, for taking us to school. You reminded me when I was young and I went to the University of Westminster to do my master's, and the first assignment was the tutor gave me a prospectus, and told me to, identify the legal risks in there to the company that was being listed. And I remember thinking, what Dutch is this? Because I had not learned anything like that in university. And here I was being asked to, examine a prospectus that had been issued. But I'm happy to say that 10 years later, this is one of the most basic assignments I can do in the sector. Thank you. I would like you to speak a little more about the tax regimes. You mentioned it a little bit, but we didn't go very deep into it. And as lawyers, as practitioners, that is one of the things that most of our clients are going to be looking for, because of course they're going to this business to make money. Nobody is coming to the capital markets they're investing to gain something. But everybody is afraid about the taxes, and yet this our sector is very well regulated. We talk about disclosures every day and transparency and everything, but I want you to talk a little more about the tax regimes across the region. How are they affecting the sector? Are they going to, attract more people to invest, or is there something we need to do?
Now, being from Kenya, this is an extremely sensitive topic right now, because there are so many legal issues around, and I'll speak about the Kenyan experience, especially for investors. So, without going into too much detail, our country took a lot of debt, and this debt has to be paid. And debt is normally paid either by taking more debt on top of the debt, which is there's a specific word that is given to it where you replace one debt for another debt, or alternatively paying said debts using taxes. So the Kenyan experience has become a bit complicated because we are under an IMF program. So this IMF program, for us to get, because we've been going for commercial debt for a long time in Kenya, so it's no longer sustainable to go for commercial debt. So we have money from the World Bank and money from the IMF. So there's a term, there's something called the primary balance, which is the difference between expenditure and so what you're making versus what you're paying. So what basically it's called a budget deficit. Yes. So what's happening is that IMF is telling us that we need to reduce our budget deficit. So the only way you reduce a budget deficit is by increasing taxes or by borrowing more. So already our taxes, if you look at what the central bank has been filing, we are spending about 80%, 70 to 80% of our income in terms of tax revenue towards paying debt. So we can't take on more debt. So the idea was to increase taxes. So of course we all know what happened there with the finance bill, because finance bill is a revenue raising measure. It's ideally meant to raise additional taxes on top of what has been raised through taxes and debt. So where we are right now is that, or what has been happening, especially in Kenya, is that for every few months, because there are some revenue targets that we are trying to hit, so every few months you find the tax regime has changed. So today we are being told, like, I'll give you one example of Client X. So Client X is a BPO. Business what? These people who are basically working in Kenya, but they are selling their services outside Kenya. So they're outsourcing. So at one point, when the year began, they were not supposed to pay VAT. But sometime in the middle of the year, it was decided that they should pay VAT. Then that was taken to court, and that was halted, or something of that nature, and they stopped. So that's been the the back and forth. So you get into a certain business and you can't really predict your tax liability. And if you talk to an entrepreneur and they talk about costs on top of everything else that they're going to pay in terms of rent, employees, and everything else, taxes are a very, very sensitive issue. So, of course, you'll find some clients want to move to other jurisdictions. A lot of clients want to close down, have closed down. A lot of clients are moving to our neighbors. So that is actually the impact. So you find if I want to serve the Kenyan market, I would rather go work or set up shop in Tanzania or Uganda, and I can sell to the Kenyan market. Of course, tariffs are an issue as well. Different tariffs. This country has higher tariffs than this one, so stiff competition and the like. Of course, it would be interesting to align our taxes, but the truth of the matter is that we are individual countries with individual needs, and that might be a bit complicated. And of course, we have to coexist in this area of the world where we are. But in terms of the tax situation, that's where I guess the industry is at, where people want to invest. They want to invest in infrastructure bonds, and they're telling you that, yeah, we suspect, we don't know. We are hearing in the newspapers that soon there's going to be a 5% tax, withholding tax on infrastructure bonds. Is that true? So, or we are hearing this or the other about this specific industry. So it becomes a very complicated discussion with clients about the tax liability. So it's quite the situation.
Yeah, all right. Thank you so much. I know Uganda has something that they are cooking. Alison would be able to tell us more about that. I see Zuhra's hand is up. I'm not too sure if you want to ask a question now or wait for the Q&A because the time is running out. Could you just give us that indulgence and we attend to your questions in the Q&A session so that we give an opportunity to Jean-Pierre to also give us his presentation. All right. And in the meantime, Charles, there's a question for you about cryptocurrency that you may answer in the chat, or we can deal with it during the Q&A. Okay.
So someone is asking, Council Charles, you talked about cryptocurrency. Can you come again on it, as we know that cryptocurrency is very difficult to control? I want to know whether this peculiar feature of cryptocurrency is an advantage or a setback as capital markets are concerned. So, first of all, cryptocurrency is a very interesting space because it's a new space. Now, it's coming. That's a fact, especially because there are whole governments who have even taken cryptocurrency and put it as part of their reserve assets. So, for example, there's a discussion in Switzerland to have, as part of their reserves, cryptocurrency be part of their reserves. So cryptocurrencies are coming. Why they are uncontrollable is because of the fact that there is this clamor in the world for people to, I guess, have more control over government spending. So, as you understand, when governments create what is called fiat currency. So, fiat currencies are currencies that are wholly managed and owned by a government. So, what governments do is that when they want to spend, they just print more fiat currency. How do they print more? They don't go to a physical print and actually print. What they do is that they issue treasury bonds. And by that, they get interest. They issue treasury bonds, and they get money from investors, and they issue investors' interests. So that's how they print money, because they have full and utter control over fiat currency that is issued by a central bank. So why cryptocurrencies are becoming very popular is because people want to curtail that sort of government authority. And two, they also want to curtail I guess they want to curtail, because there's something called the central bank digital currency debate, and some countries want to institute them. Some countries have already instituted them. And there's been a discussion in Kenya about instituting a central bank digital currency, which is just a digital coin, only that it's a currency that one can see what you are spending on. And now that opens the discussion about privacy. Nobody wants to know, nobody wants to be tracked in terms of what they're spending. So people are going into these cryptocurrencies in the imagination that I want to be completely anonymous in my spending. I want to be completely anonymous in my movements. Of course, then anonymity in these cryptocurrencies, it varies. So governments are trying to regulate cryptocurrencies. I know in Kenya we have a tax on cryptocurrency exchanges. I don't know how that is going to work in the current climate, but it's something, of course, that is an interesting area. But maybe the best way I can put it is this: Donald Trump wants Americans to all have crypto. He's supporting the whole crypto agenda. So if that is now becoming a political discussion, I know that eventually those coins will become something that is very prevalent all over the world. So my thinking is, let's learn about them. Because clients are going to come talking to you about them. They're going to come explaining to you that they want to invest in this coin and in that coin. So of course, it's to advise them on the relevant laws in the jurisdiction, to advise them on issues of money laundering, terrorism financing, and the like. It's good to have all these factors in your mind when these issues come up, but it's not something that we should run away from, but it's something that we should start to look into as practitioners, because it's part of our world. It's like AI. It's coming, and we should embrace it, learn how to live around it, because it's there. It's a real thing. So and also they asked whether it is an advantage or a setback as far as capital markets are concerned. Now, that's a very, very heavy question, but let's look at it this way. The Americans have found a way to create financial products around Bitcoin, and I believe there's one around Ethereum. So it's if that becomes what we implement here, then those could be additional financial products in our capital markets, meaning that is definitely more work for practitioners. So it's not necessarily a disadvantage, but it's something that is very popular with a lot of investors. So it's something that we need to take note of. Yeah.
All right. Okay, thank you so much, Charles. That was very, very insightful. But I see our time is running super fast, and I cannot wait to hear what Jean-Pierre has for us. He's going to be taking us through the techniques of enhancing the role of legal practitioners in capital markets. Welcome, Jean-Pierre.
Thank you very much, Eileen, for your generous introduction, as well as your role of moderator in this session. I would also like to express my gratitude to the ELS, especially the committee on which you are a member, for having me. And greetings to my fellow panelists and our audience. Now, I would like to build it right from where Mr. Charles has stopped on the role of lawyers in capital markets. First of all, it is very important to understand that the capital market sector is highly regulated sector. That means that there is no capital market without regulation, and there is no regulation without lawyers. So the role of lawyers in the capital market sector is very huge and equally very essential. Because sincerely, we are talking about markets that are built on investors' confidence. It's not like banking or other financial sectors. So the role of capable lawyers and other professionals is very important, and market can only grow when that law is played accordingly. Now, about how the role of legal practitioners can be enhanced. First of all, I think there has to be enhanced vis-a-vis the regulators to start with. It is very important that regulators work with lawyers in order to build a practical and fair regulatory framework. Because we have to work together. We have to work together. We have to participate in the regulation making a process, but also it is us who accompany all the players. We have to advise all of them on the legal aspect of the market. So it is very important that legal practitioners are engaged with the regulators so that they can be able to play their role. But also, when one talks about the role of lawyers, we tend to think that lawyers start acting in capital markets when they have clients ready for the market. That is not true. Lawyers have to be engaged early on, and this is very, very important. In fact, on some markets, including Rwanda, some companies, small companies, startups, SMEs, have to start their capital market journey from investment clinic. This is a platform where these companies have to be helped by different professionals, including lawyers, to prepare them for the market. And what lawyers do at that stage is very critical. We have to help these companies to organize themselves, to make sure that they have the required documents, including but not limited to incorporation documents, like articles of association, like board charters, like different policies. And you cannot go to the market if you don't have, if you've not grown at least at the level where you have the required documentation as a company. So lawyers have to help at this stage. And it is also an opportunity for lawyers, especially young lawyers, to make their own clients in the capital markets. You can accompany them from investment clinic, and from there you can also be hired to handle their transactions when they are ready for the market. Now, so you don't have to wait to be called upon to advise by companies that are ready for the market. But it is important to note that there is a lot of work related to capital market before companies come to the market. In Rwanda, there is also another opportunity for lawyers to work for companies before they come to the market. And that is a regulatory sandbox of the Capital Market Authority. And this is not a peculiarity for Rwanda. I know that there is one in Kenya. And the regulatory sandbox is also a platform for companies to try their new ideas, like a fintech and other solutions that are new on the market. So lawyers can help companies at that level also to make sure that they came up with products that comply with the existing regulations, all so that they can even advise the regulators on how to regulate the new products. Because there is tendency to be defensive when it comes to some new products, because of course some of them look like scams, but when they go through the regulatory sandbox, where you can go through different examination, some solutions can be really very important in the capital market, but also in the financial sector. Now, allow me also to touch on the enhancement of the role of advocates in capital market transactions. First of all, if there is a transaction, it is possible that the transaction can actually be arranged by lawyers. in countries like Netherlands, South Africa, transactions like securitization, also known as ABS, asset-backed security, can be actually arranged by lawyers, and then they can also hire some other professionals to make sure that the transaction can go smoothly. So it is very important to know the law of the lawyer in the transaction. Are you going to act as the arranger for the issuer? Do you need third parties? Are you going to only work on some sections in the prospectus? Or you are going to be the counsel to the issuer? So it is very important to understand your law, and there is no better way to enhance the role of legal practitioners in transactions than making sure that they understand what they have to do. And essentially, as most of my colleagues presented, lawyers will help all the participants in the transaction, because you have to advise every participant on their legal obligations. You have to make sure that the transaction is fully compliant to the regulations. Also, it is important to reflect on the responsibilities and the actions to be taken. It is best to come up with an action plan with timings. This will help you to actually deal with clients and all the participants. You have to make sure that clients have agreed on all the timelines to avoid any issues. Also, practitioners have to be proactive. We are not supposed to be. You are not supposed to wait to be chased by clients or other members of consortiums in transactions. It is possible that some things can delay, but in that case, they always have knock-on effect. But also within the law firms internally, we have to be able to define the laws within the team. It is very important to be honest about what team members know and not know. But also towards client. Sometimes clients can put responsibility on lawyers for matters that are not even in their competence. So it is equally very important to make things clear with them. It is very important to have a team leader, on the legal aspect, so that all efforts can be well coordinated. And it is very essential to make sure that the whole team is kept in the loop. And this requires some regular team meetings so that members can discuss about the progress. Also, you cannot play your role if you don't understand the transaction. Understanding the transaction is very important. The truth is that the capital market is an evolving sector, thereby also an evolving area of legal practice. So it is very much possible that sometimes you may not have full understanding of the transaction. And in that case, you have to either work with other people who understand the transaction, people who have worked on the transaction before. Some transactions are new on some markets. And I think it is very important to consider collaboration with the colleagues from other jurisdictions. But not only for new transactions on the market, but also for some transactions with cross-border character, like cross listing. So if you don't understand, if you don't have full understanding, synergy can really help. Also, I think it is very important to understand the legal issues surrounding the transaction. You have to be able to understand the regulations related to the transaction. You have to understand the disclosure requirements. You have to understand the role of parties, the licensing requirements, issues of insider trading, so that you can be able to play your role properly. And among other things, you have to make sure that you are ready to, it's very important to be ready to advise on the regulatory requirements. It is very crucial so to try and understand other aspects of the transaction, like clearing and settlement arrangements, because some of these aspects are often forgotten because of their technical character. But they are very important, and lawyers are supposed to understand on how they work. Also, another technique is to be aware of the market practice. Legal practitioners have to try and access the templates, precedents, because capital market transactions are typically based on standard documentation. And you cannot fail as a lawyer to refer to the precedents. it is good to be aware of what can be changed in the templates, because copy paste cannot work. But at least in this area, you don't really have to start from scratch, because most of the things, especially in this part of the world, have been done elsewhere. And you realize that the regulations have a very little in terms of differences. I cannot stress enough on the aspect of collaboration.
Yes.
Collaboration is very important, because some of us have not worked on all the products, and I don't think anybody has done that. But also new products will all come.
Yes.
And we are not going to have the privilege to go to school before we start working on the new products on our respective markets.
Yes.
Irene, I don't know if you would like me to stop here.
Yes. I unfortunately will need to cut you short because I see the time is really, really, really fast spent. But thank you so much for giving us those techniques. We've understood that this is a specialized area, and so we really need to develop our knowledge and our skills. And then we need to do solutions that are relevant to the clients. And then also we need to, master a wide range of products and not just be cut up with one. Okay, team, I'm going to request you give us like 2 minutes to wind up so that we don't just finish out of the blue. I'm going to ask my panelists, or maybe I'd promise Zuhra to ask her question. Zuhra, your hand has been up. Can you please ask a question very fast, and then we'll come back in the order that we presented to do our final thoughts and parting shots in half a minute each. Zuhra, are you there? If you're not, then I call Alison to give us her final thoughts and parting shots so that we wind this up. Alison?
Yes, Irene, I'm here.
Yes.
In terms of our parting shots, I think I'll just pick up from the conversation from the last two panelists regarding the opportunities that are there for legal practitioners.
Yeah.
And as we've seen, I think they are quite immense. I picked up on the point by where he talked about regulators ensuring that we collaborate with legal practitioners so that we can come up with sound laws. Indeed, that is a very legitimate call. I think from our end, what I'd like to suggest and what I'd like to recommend for legal practitioners is beyond the basic advisory that we are giving, the compliance aspects, advising your client whether or not a proposed regulation is onerous or creates an additional compliance requirement. I think we also have a duty, and as we understand capital markets more, to come up with more strategic advisory. Capital markets is a flagship. Our flagship product is cheap patient capital. And of course, our core issue there is your capital structure as your client's capital structure. How appropriate is it to their business model? It doesn't make sense if you're registering a second mortgage for a client when you have capital markets knowledge on tools that they can use to improve their capital structure and support their growth aspirations as a business. So I think as legal practitioners, enhancing our knowledge in capital markets, especially from an opportunities point of view, will actually add value to the kind of legal advice that we're giving in the corporate commercial space, where we are all looking, or businesses are all looking for capital. Then maybe my final point, Irene, is around just generally how the economic environment is changing and gravitating towards capital markets. We'll notice that over the past few years, from the various global shocks, the pandemics, the global insecurity, where we've had wars actually impact us as a region from an economic point of view, there has been renewed interest in capital markets as a tool that can actually revive economic growth beyond just providing capital to the private sector as a platform to raise capital. So it's both from a regulatory point of view, but also for us to interest ourselves with the different policies that are coming up. It's an area to watch, because a lot of governments are looking at how best products can be integrated to support national public debt management, as well as bridge the national gap, the national budget gaps. So yeah, that's an area that I would like to leave us with. And just maybe, I think I would not be comfortable if I left without making an altar call. I see there are very many attendees on the call. Please interest yourselves in the capital markets. I don't know how many of us have SCD accounts in our respective markets. How many of us have ventured into the collective investment space? Don't just be proxies at AGMs. You can also be shareholders, attending in your own right as part owners and sharing in the profits of the company. So yes, Irene, those are my parting shots.
Okay, thank you so much, Alison. One quick one, Jean-Pierre, somebody needs your phone number and email in the chat. If you could please attend to that. Bertha, can we have your final thoughts and parting shots quickly in half a minute, please?
Thank you very much. So my view or point is that there are great areas of opportunities and potential for more products in the capital market space. As we touched on, their carbon projects, their VCs, money markets. If these areas are developed and operated properly, they can result into numerous opportunities and benefits, including the community uplift, employment, as well as generation of new economy, which then in the all boosts the economy of the region as well as specific countries. Thank you very much, and to everyone that attended. It has been a privilege.
Thank you so much, Bertha. We were privileged to share your knowledge as well. Charles, your parting shots in half a minute.
Mine is, there was a discussion about, there's been a discussion revolving around the fact that we are relying more and more on our capital markets for raising of capital. So there is a paper that was done by a scholar from Ethiopia called Solomon Tadisi, called Financial Architecture and Economic Performance, International Evidence. This is a paper that I really enjoyed reading, especially on financial architecture. So for anyone who wants to understand where we are moving from and possibly where we are going, which is from a bank-based to a market-oriented, to market-oriented economies, this is a very good paper to sink your teeth into, just to get a good understanding, especially of places like Kenya and our clamor to increase the number of companies that are listed on our capital markets. I'll also say thank you so much for the invitation to talk and discuss some of these issues, which are very important to the region. I'm very honored and very humbled to have been part of this very interesting panel. And thank you.
Thank you so much, Charles. For the homework as well, I expected that from Jean-Pierre, but yeah, we'll go and read the paper. Jean, please give us your final thoughts and parting shots in half a minute. Jean-Pierre, you're muted. If you could please unmute.
Oh, okay.
And
Thank you.
Charles, please type the name of the paper in the chat for the people. Yes, Jean-Pierre, in half a minute.
Thank you. That wind up is very important to remember that this area of capital markets is very evolving. Thanks to technological advancement, regulatory changes, and shifts in investor behavior,
Yes.
but also some geopolitical factors.
Yes.
And it is very important for us also to be pragmatic so that we are always ready to serve in this domain. I thank you very much.
Thank you so much, Jean-Pierre. And thank you so much to the panelists, Alison, Bertha, Charles, for coming in and giving us your wisdom and sharing with us. I'm sure we've all learned quite a bit. If anybody, is just starting out in capital markets, you've certainly picked up something. There's so much potential that we have. We've looked at regulatory challenges and changes and things that we need to look at. We've talked about our need to have knowledge deeper, to develop specialized knowledge of the markets and the products that are there. And that is an area for us to interest ourselves in. We need to learn to craft solutions. Don't wait for the clients to come to you. Begin to put together things that will work for them. And don't fear about the regulations not being there. We have, regulatory sandboxes that you could play with so that you are giving value to your clients. And last but not least, I'd like us to explore technology. It's also something that we can't step away from. Somebody asked about cryptocurrency and how it's affecting capital markets. And I think that's another area we need to look at. How do we interplay with technology in the capital markets? Thank you so much. My name is Irene Namuli from ALP Advocates. I'd like to hand us over back to our host, if he's still on the call, Gabriel. Gabriel, are you still with us? All right, it looks like Gabriel is not in the chat anymore, but thank you everyone for attending the webinar. Thank you for participating, the questions, and especially the panelists. Goodbye.
Bye.
Thank you and goodbye.
Okay.